In this video, I talk with a guy named Adam, who's an actuary in the insurance industry. We talk about Tesla and specifically Tesla insurance, what that could mean for Tesla as a company, but also what that could mean for the car insurance industry as a whole over time. And then we also touch on Lemonade as well. So really interesting to talk with someone who's in the field of insurance. If you're not familiar, an actuary is a really difficult job or sort of title to work yourself up to. It takes a lot of mathematics, statistics, a lot of tests to go through, very difficult tests to go through. And as an actuary, you're working to price risk or underwrite risk. So anyways, interesting to hear Adam's thoughts, and I think you'll enjoy them as well. Just to be clear, as always, nothing on this channel from Adam or myself is personal financial advice, so make sure to keep that in mind. But if you get value out of this, make sure to subscribe to the video, hit that button down below, hit the thumbs up while you're at it, and go check out Adam. He's on Twitter. His handle is @InvestInAI, and that'll be linked as well.
Yeah, no, I think Tesla insurance was not something I was expecting either, but I think it is maybe not talked about it as much as it could be at this point. At least it probably will be down the road as it rolls out to more places and more Tesla users have a chance to use it. But it's really exciting. I mean, we were talking, I think, just as we were messaging over Twitter that
yes.
Like in a way, the most fundamental thing an insurance company can do is or improve on, or the competitive advantage they could have is in their pricing of risk. At least that's how I understand it. I'd love to hear your thoughts. But so with Tesla, what they're doing, if you have a digital car that can totally censored out, can receive all the data of the driver, all the how they're accelerating, turning, braking. Not only that, then all the cameras in the car that can literally see the environment around it the same way full self-driving is working. It's just, to me, it's going to be incredibly powerful, or potential to be incredibly accurate in pricing someone's risk. Obviously not perfect, I'm sure, but way better than how we price risk now, would be my understanding. So yeah, what excites you most about Tesla insurance?
Yes, so you've mentioned some of the key points. So when I first learned about it, I just knew it's going to work. So I haven't spent any time at sort of analyzing it in terms of trying to go through the details of how it's going to work. And it can get very complex, and it's even sort of beyond that sort of conversation. There are complexities, but sometimes all you need to know is that it's going to be very successful, and I've got no doubts it will be extremely successful. And it's only sort of, before talking to you, I sort of try to go through all the pieces to see how is it going to most likely develop, and the picture gets really sort of fascinating. So I think when you talk to CEO of Lemonade, he also mentioned some of those points, and I tried to sort of, even before showing it, I tried to sort of go through it. And what I really got to is that with the very powerful data, and I can sort of expand on it, the predictive power of the data, what is likely to happen is that gradually people that will get very good deal, that are safe drivers effectively, will get very good deals from Tesla. And some people, and I'm not sure if that was actually mentioned in previous interviews, some people will actually be priced out of Tesla insurance. They won't be able to afford it. Obviously, it's their choice in terms of how they want to structure the pricing. I'm just saying that they will have a power to price it so accurately that some people will pay very small premium, and some people will be quoted something so ridiculous that you don't come across anything like that in the market at the moment.
Right. So
what will happen then? Those people that get quoted those huge prices will move to other insurers, and Tesla will be left with sort of safe risks and much lower cost. And if it stopped there, that wouldn't be as exciting. But actually what I see happening then, as those unsafe drivers move to other insurance companies, that they will have to react. And what I expect will happen, sort of unfortunately for Tesla drivers, if you sort of take them as a collective group, the way insurance companies price risk, they sort of look at any sort of data points that they can pinpoint. So car brand is one of them. Yeah, so they might actually decide at some point that Tesla drivers, as they see them, are very unsafe. At least the population that they will be getting.
Yeah,
they might be. So
right.
the only thing that they can do is increase the prices, and that sort of creates a feedback loop, interesting feedback loop. So again, you will have at that point, some of those unsafe drivers will still find it, those that are still relatively safer, will still find it more attractive to move back to Tesla. And that sort of can go on with insurance companies increasing insurance for Tesla. So I think it can go to the extent that some of those Tesla drivers will be forced to sell their cars. They won't be able to afford it, which is another sort of side thing. Not maybe important from investment perspective, but I think it can go potentially as far as that. Right. Obviously, markets don't work in a sort of ideal way. Insurance companies may not have all the information, may not look at it closely enough, at least for some time. Same with drivers. They simply may choose not to take a better deal. I think Tesla has got a lot of opportunity to I know they don't do sort of advertising, but it's so easy to just display a price as a driver based on your driving. You can pay this. It's quite easy, and then some people will sort of naturally switch. And the bigger the discount, the safer the driver, the more likely that person is to switch. So I can also add, in terms of the data, why is the data so powerful in case of Tesla? So the way I think about the data, obviously you've mentioned that data is very important in terms of quantifying risks and assessing how much someone should pay, how costly it is for an insurance company. So other than the fact that insurance company needs to allow for administration, other than that, if you just focus on cost of risk, I sort of look at it even in a sort of more granular way. So there are some things that are just down to chance, and that sets a limit in terms of you can't price more accurately. I mean, it sort of would even get sort of philosophical. At what point does it become a chance? But just to give sort of one example, if you've got two identical drivers, completely identical sort of driving Tesla, and one is sort of, let's just call it unlucky and gets on a piece of black ice on a road. Yes, that was just on one side of the road. Yes, and the other one doesn't. Yes, that's where it's sort of I sort of call it chance, and that's something that no matter how good the technology and no matter how good the data, this is something that this sets sort of a limit in terms of how far can you go. Not a huge not a huge point, because most accidents don't happen because of chance. They actually are related to certain driving styles and certain situations. So this is really the main focus. This is the main focus and the main area of opportunity. So traditionally, insurance companies use some other sort of signals to determine how safe drivers are. But what would be ideal and what Tesla can do, they can look at specific situations. So that they can look. I mean, already for safety scores, they look at following distance. That's a nice sort of easy example and something that is very easy to get with the sort of vision systems. So short following distance does not mean accident, but actually a lot of those drivers will ultimately end up with an accident because there is a limit in terms of how quickly car can stop. So if you are following someone very closely, you may think that you've got full control. If someone hits on the brake before you, your car just won't be able to stop. So it automatically translates into into sort of higher chances of accident, higher cost, and higher premium if someone can actually collect that data. So what other insurance companies would do, they don't have the data, so that they would, for example, look at your age and are you a male, and say, okay, so you probably follow other drivers very closely, which is not true for all the young males. And same with sort of speeding and other things. That those are just so insurance companies use some sort of proxy to be able to determine if people are likely to put themselves in those situations. Though those proxies are far from ideal. Yes, you actually want to know if individual drivers put themselves in those specific situations that ultimately cause accidents. And as I said, some element is down to chance. So yes, in an ideal world, you would be looking at, say, you've got 100 people coming to you wanting insurance. With a crystal ball, you would just look, let's say that they are identical. In that sort of case, there's no way to distinguish them. So it's just down to chance. So that's sort of what I sort of mentioned in terms of the limit. If you had a crystal ball, you would know, oh, this guy will have an accident. So if that was possible, yes, you would charge that person for the cost of the accident and charge everyone else pretty much zero. Yes, because they won't end up in accident. That will not happen. Yes, but that probably doesn't matter, because, as I said, not a lot of accidents are sort of due to chance, like tire blowing up. That's another example. Yes, not something that Tesla can. I mean, there's a lot that Tesla can do in sort of different areas, and I've actually looked at causes of accident by all different sort of most common causes of accident. Again, not an expert in that area, because it's sort of not my sort of traditional area that I focus on, but it helped me sort of going through all of them and seeing, can Tesla do something about it? And with most of them, the answer was yes, with the technology they've got. And actually, I won't go through all of them, obviously, but just as an example, driving under influence, one of the major causes. Can Tesla do something about it? I believe with the vision system, I don't even think that they need to use the internal camera in Teslas, but just with the vision system, I think algorithms could determine the behavior that is associated with just also slower reaction times. You can deduct that. Yes, the algorithm can deduct that and automatically translate it into sort of lower safety score, higher premium. How Tesla chooses to sort of price that, can they sort of increase it indefinitely, or can they say, okay, extra $100 this month for this one incident? If it doesn't happen again, you go back down. If it happens again, we keep it $100. Actually, it would probably be much more. Yes, those are very powerful indicators. Yes, like driving under influence. I would imagine it translates into a huge bump in premium if insurance company has got access to the data, but it never they were never able to access the data before, other than sort of prior accident history.
So what it meant, it's amazing. And it's kind of my understanding, like the power of what Tesla has is, so there is sort of a, like you're describing, there's sort of a baseline maybe of cost of risk. There's a baseline cost of risk that there of sort of unexpected things, like you blow out a tire or something, like how there's no as far as we can tell, there's no way you'd ever be able to predict that, but then on top of that, or past that, then Tesla they have a safety score now, and they've set that up on a few different variables and structured it different ways, but they could, my guess is they'll keep kind of refining what variables they're using. Maybe they don't have it now, but then there's a driving under the influence sort of factor in there where there's, like you described, they maybe, and they could, they can develop those model around what the actual fleet is showing. So maybe they have 100 or 1,000 examples over time curated of people driving under the influence. So then they can make an algorithm that kind of can detect that, or they fit their entire model to more and more variables that include factors like that, and maybe other factors they haven't even thought of yet that are just makes sort of minor increases up or down in safety sort of analysis. And then what's crazy is then they can look at their whole fleet of data, their whole fleet of actual people driving around, and say, they're the actual results of people driving in this way, reaching this sort of many accidents per this many miles or not, right? Is that really layman's kind of way of understanding some of the statistics or modeling they would be trying to do?
Yeah, that is all correct. I mean, and not much to sort of add to that. At the end of the day, it's having a lot of data that is linked to accidents in some way, or not having accidents, and then you can sort of slice and dice it, put people into groups, into sort of, in case of Tesla, it can be sort of very small groups. I mean, literally, that they can set the premium by $1. So if they want to, if they can try so accurately, someone will pay $79 a month, someone will pay 127, or it will be a huge range. I mean, as far as I understand, the differences in terms of safety, the sort of those real differences are huge. So I don't want to put like exact figures on it, but it's orders of magnitude. It's like what Elon likes to say, orders of magnitude. And when you talk about premium orders of magnitude, like 2 orders of magnitude times 100, someone paying 100 times the premium of someone else, that is huge. And again, there will be that sort of baseline added to that, which sort of reduces it somewhat, so some sort of admin costs. So you don't just pay for risk, but it is a huge element. So it's extremely powerful.
And it'll be really interesting to watch it play out in the whole marketplace as a whole, like you were describing before too, that they're really like just a huge, the implications are profound, I think, on the industry as a whole, that Tesla can really, they'll be able to suck in the very best drivers, and they won't even, I don't think they'll even advertise for, just like they don't advertise for anything. I think it'll just spread by word of mouth between Tesla owners that, there's Tesla insurance now. They don't even need to advertise or compete for it against, which is, I think, more typical in insurance. You'd have a lot of advertising spend to kind of get to win over customers. But so they won't even need to do that, and then the very best, very safest drivers are gonna all go to Tesla, and the most reckless, worst drivers are gonna go to everybody else. Like it's profound. I think long term, as there's more and more Teslas, the fleet of Teslas grows bigger and bigger as the production rate grows every year, and there's more Teslas on the road, and then Tesla insurance becomes available in more and more states, and then more and more countries. It's exciting for me too, as a just being a Tesla shareholder and bull, that it makes the product that much more compelling, even just for somebody thinking about buying their next car. Eventually down the road, if there's another EV out there, another car, well, they don't have Tesla insurance if they're not a Tesla. And if they know I'm a pretty careful, good driver, like here's my friend or my family member who has a Tesla, and they have the Tesla insurance, and they pay half the rate of what they pay anywhere else for a similar kind of car, then it will become compelling, even motivate people, one more reason to choose a Tesla over another car, even at the point of purchase. I think that just drives the value of the product even further.
Yeah, another huge point that you sort of touched on, and another thing that I got to in terms of sort of analyzing it, and because sort of just thinking about Tesla insurance on its own, and the opportunity there, yes, it is huge, but then when you think about it as just one element of the puzzle and the whole sort of vertical integration, it becomes so much powerful in terms of overall cost of ownership, which will be sort of very important for sort of in terms of switching from ICE to EV. But then when you sort of make that switch, and a lot of people will, whether they know about it now or not, a lot of people will over the next, I mean, most of the people will over the next decade. Let's call it like that. When you make this that sort of switch, yes, the sort of the ticket price in terms of the car does matter, but overall cost of ownership, and that's where sort of EV cars have got sort of that natural advantage, is an important factor, sort of maintenance and depreciation, all those things that sort of Tesla community knows about. And then you've got insurance now on top, and insurance actually can be quite a sort of important sort of factor. I sort of remember first coming to Canada, and that sort of wipes off your driving history. And sort of I was doing my MBA, so took sort of a career break. I was still sort of working like 1 day a week for the company in the UK. So I bought a sort of fairly old SUV. And then the first quote I got for car insurance for a year was more than the cost of the car. It was like, it was comparable, not more, actually comparable.
Yeah.
So it was $9,000, the first quote I got. Then I managed to get it down to the best one I got was $5,000. Still, that was that seemed like fairly high, sort of considering my age and sort of knowing all the risk factors as actually should. I thought that's not fair. But that's another thing that tells you sort of about insurance companies, that they are not that accurate in terms of pricing risk. And especially when there are sort of small pockets of customers, sort of immigrants, newcomers, in certain sort of age groups, it's a small category. They don't care enough to sort of price it accurately. They can make much more profit on certain groups, and that's fine. At the end of the day, you don't have choice.
Yeah. What any thoughts on if there's a robotaxis in the future? Have you thought about what that could mean for Tesla, for insurance? I would think if for robotaxis, then would Tesla become liable for the risk then? Like if a car was driving itself fully with no one in it?
Yeah, so robotaxi, a huge topic. I've got a few points to sort of mention on that. I mean, do I believe it's going to happen? I think that if you looked at my Tesla order page and all the Tesla cyber checks with FSD, you would know the answer. Let's just put it that way. I sort of treat it as an option. Tesla options, almost free. And, I mean, in Canada, it's 150 was. I mean, they stopped that opportunity now, so I can't add anymore. And I try to space it out in terms of, because you got to get capital to I can't suddenly get that many Tesla cyber checks.
The deliveries,
yeah. My thinking around it was, okay, it's like an option, like a financial option. You pay a small amount, and actually it's refundable as well. So really your opportunity cost is interest on sort of 100 US or 150 Canadian dollars. That's not really much.
Yeah,
you can hardly find a better investment and an upside potential if FSD is successful. And at the time, I was putting, I was sort of thinking about it as a realistic possibility. Yeah, so not even like huge confidence it will happen. By the time Cybertruck is released and I get to my sort of place in the queue. But long term, I'm certain it will happen. I'm certain FSD will reach that level. I think it's just inevitable. And robotaxis just naturally follow. It just effectively market forces. Yes, it will become too sort of compelling in terms of that option, in terms of car ownership versus just using the fleet occasionally. I mean, in the past, that sort of involved having a driver, and the proposition was not as attractive. I mean, in driver, whether sort of thinking about Uber, for example, and cost of gas, those were like two big costs. You suddenly remove that and you share it between the customer and in that case Tesla. So it's just too attractive to miss of an opportunity, and that's why I want to participate in it one way or the other. So I'm not sure how it's going to sort of work. I don't imagine loads of Cybertrucks sort of running around as robotaxis. It will be probably the future sort of small model of Tesla that will be the main sort of robotaxi, which can look sort of very different, sort of no steering wheel, and sort of made for the new purpose. Yes, it will redefine transport. But FSD and sort of FSD is sort of important in terms of the relation to insurance as well. So if FSD reaches sort of the sort of order of magnitude safer level than average human driver, that sort of links nicely to insurance as well. Because we said that Tesla drivers maybe have less accident, and that will naturally reduce premiums. But what if FSD is still far safer? Then Tesla can offer a discount for taking FSD or using it sort of occasionally. So that's a great sort of cross-selling sort of opportunity. So effectively, your lower insurance premium can partially at least pay for you using FSD. So huge sort of huge opportunities there. And finally, FSD in terms of sort of even, I mean, robotaxis, huge market again, sort of compared to car market, it's so much bigger. So and again, insurance is huge, but robotaxi is that's so much bigger. But I'm also very excited around sort of semis with FSD, and that, I think that will be one of the biggest things, or maybe even the biggest things we've seen in sort of human history in terms of like that step change. It will be something completely different. I mean, a huge sort of chunk of economy in terms of transport of goods done by effectively robots, and as Tesla shareholders, that puts us in a very good sort of position.
Yeah, I kind of view insurance partly that way. I think I think Teslas will eventually solve, robotaxi level full self-driving too. I think they will, but obviously we don't know 100% that they will, or when that could be. So I kind of view the insurance as another step towards, even if Tesla never achieves full self-driving, and maybe it's too difficult in the real world, too more complicated than we ever thought, and no one can achieve it or fully, it gets better and better, but not enough to trust it with no one in the car. And then at least then Tesla insurance is still, so exciting because it makes the product just that much better. One, it's a value driver for Tesla themselves, and could be a major source of profit themselves if there's insuring people are just driving their car. But then, as we mentioned, just makes makes the actual cost of ownership again just that much more attractive for a Tesla, for people years from now to consider buying a Tesla. So it increases the probability that the world's just going to be full of Teslas in the future. And they'll just keep going, maybe 20 million units, maybe even more, because it's so attractive compared to what else would be on the market, that to own a Tesla rather than anything else. So it helps me as an investor go like, okay, I have a ton of confidence in the sort of probable outcomes of the future could be could be great, you know, even if there's no robotaxis, even if that never is reached. I think it's going to be reached. So I think, and the robotaxi future is even way better, you know, as a Tesla investor. Is like you said, like the opportunity there is just mind boggling. But yeah, no, it's pretty exciting.
Yeah, in a way, if it was easy to solve it, that wouldn't be just as exciting, because competitors could copy that. I think it definitely shows now it's more challenging to solve, which also means that eventually when Tesla gets there, and I believe they do, but also I'm sort of mildly sort of optimistic in terms of the time scales. I sort of see that maybe taking much longer than even we sort of currently anticipate, and definitely much longer, obviously, than initially. So I mean, even sort of Elon Musk sort of predicted. So yeah, but the progress is key. How quickly is it progressing? And it is progressing a lot. If it slows down at some point, there will be other things like Dojo to speed it up. So how many steps? It's not really steps, but how far away are we? It's hard to say. But with the progress, I think we will get there.
Do you have any thoughts on Lemonade? And if you don't, that's okay too. But
yeah, so I did some initial research to sort of really say, I think to really say how big opportunity that is, I would really have to understand their data. Because with Tesla, it's so clear to me that how strong the data is. As I said, it's when you can sort of pinpoint those situations that lead to accidents, that's the best that you can do. All the other insurance companies use some sort of proxies. So my initial impression with Lemonade, from what I sort of heard from interviews, is that yes, they've got access to more data, but how good quality the data is, and they definitely can generate more insight out of it. How big competitive advantage it is over other insurance companies, that's not exactly clear to me. So one big limiting factor for most companies is the number of questions they can ask. Yes, because people just don't want to answer hundreds of questions. So you've got to be very selective. So were they able to overcome that? Obviously, they've got those other things that Lemonade's CEO mentioned, in terms of even like subtle things like interactions in the app. But again, you want a bit more. Yes, you want something that is even more closely linked with the chances of, say, accidents with sort of cars, with other insurance products, because they sort of, I mean, sort of starting maybe with the clear sort of advantage, even sort of over Tesla. They've got potentially the whole market. Yes, Tesla insurance is limited to Tesla. Yes, so huge opportunities, but will always be limited by the number of cars. Lemonade, they don't have that constraint, and they also operate in sort of different areas of insurance. They are all very different in terms of what matters, and sort of my sort of area of expertise. So life insurance. Very sort of difficult to get to the quality of the data that you would ideally want. Not sure if it will ever be sort of fully sort of allowed, in terms of the regulatory environment may not allow you to, I mean, genetic sort of, your genetic profile, your sort of family history, those sort of things, and almost sort of it's not like with Tesla. There won't be cameras observing you, sort of your daily life, to assess your sort of lifestyle. So I think certain parts of insurance market will never be able to go as far as sort of car insurance, in terms of potentially providing the best possible information. I still think there's a lot in terms of for Lemonade. As I said before, I'm a strong sort of believer in terms of artificial intelligence, and again, sort of coming back to my Twitter handle invest in AI, which I sort of I think I got back in 2016, and I got a website with the same. I never used it actually, but I thought, okay, it's a great time for. So at some point I will do something with my invest in AI website. So because companies that will rely on AI will disrupt other companies. So that sort of points really very well, I think, applies to Lemonade. I mean, the whole sort of, I mean, not even sort of pricing risk, but the whole sort of package. They're sort of much lean, sort of modern. Insurance companies move very slowly, and part of it is sort of regulatory environment. So it is actually a nice sort of parallel with sort of Tesla and traditional legacy automaker. I see it as being sort of very similar than Lemonade, traditional insurance companies. If you don't move at the same pace, you just can't compete. So there will be, so I don't actually, I sometimes like to separate work from sort of investment. So I don't, I've never sort of invested in insurance space, to be fair, but if I was, then Lemonade would definitely be my choice over legacy insurance companies.
Yeah. Well, I think there's still, like, I feel very, very confident, in Tesla's future that they're going to be successful. If you hold them for 10 years plus, you're going to have a great investment. Lemonade, I'm not as certain. I've talked about with others that it's kind of like a binary outcome. Like, it could go bankrupt still. They could run out of cash and run out of investor confidence and go bankrupt or be acquired for very little, or they could have a huge success. And it's kind of like some of the things you're mentioning. I do really like them, that their business model is built from the scratch up, kind of like, or from the ground up, like Tesla's is, that it's very, very lean, very, very like customizable, changeable, moldable for the user experience to improve it. So all those sort of operational points are to me, it's clear, it's excellent. Where the question is the underwriting. Do they have underwriting advantages? I like what you said. Like, what's good is they have a whole spectrum of products, and I would think there's going to be some crossover between products, or could be. I would think, like, if someone's a more reckless driver, they also, this is really, just be shooting off the cuff, but if somebody was a more dangerous driver, I would think they might be like a more dangerous, like a little more at risk of like their house burning down, or more, or a reckless homeowner or something, or careless. I'm not sure if there's data to support that, but I would wonder if there, but across products, there could be some, or sort of better risk profiling across products as someone bundles multiple products together with them. So you definitely, like that advantage over Tesla, it's just one specific product. And then, like you said too, it's hard to imagine too many other products being as sort of ingrained as auto insurance can be, that you really can pinpoint like Tesla is doing, or can do, is pinpointing the exact person's driving score and safety kind of risk or risk profile. I know Lemonade's trying to do that with, through your app on your phone. So, which I think would still have a lot of the main factors. Like, if you slam on the brakes, it's going to be able to tell that, or you turn, which I think would probably be some of the most critical things. They're not going to obviously they can't see, like a Tesla sees that you are this far away from the car in front of you, or you drove by, something really close or whatever at a fast speed, or like there's things like that. Tesla can go even further, but it still seems to me like that Lemonade's car product could be pretty powerful compared to just what's out there, or what's traditionally done, but definitely not as certain, for me still, but I'm covering it closely on my channel. So wanted your thoughts on that. So yeah,
I will definitely research and follow some more now that I've learned a bit more about Lemonade, how it's sort of going to develop, and try to apply more of sort of my expertise and sort of background. I mean, insurance space is I mean, from my perspective, it's sort of very interesting, and a lot of sort of complexities and things that people don't really think about that much. So a lot of regulations, for example, a lot of legacy systems that sort of interact, a lot of actuaries as well. There are sort of a lot of sort of moving parts that all matters. Sort of regulations in terms of capital requirement, and that there is a lot around that again people don't sort of think about. But in terms of insurance companies, yes, it is about taking premiums and paying claims, but a lot of insurance companies are exposed to potentially catastrophic risks or sort of very bad years of experience. And because of that, they need to hold a lot of capital. And that's really a big part of being in the business as well. Also, selling some of that risk to reinsurance companies, that's sort of another thing. It's not an area that is, so I'm mentioning it not because I want to sort of go into all those details, but they do matter for both Tesla and Lemonade in terms of how quickly they can move and how difficult it is to get into that space. So as you know, with Tesla, it's taking them a lot of time getting those licenses. And again, it's like with FSD, it's a bad thing, but a good thing at the same time. If someone 10 years down the line says, oh, the only way for us to compete with Tesla is to actually get into insurance space, that's too late. Because then you need 10 years to catch up, and there won't be 10 years to catch up because Tesla, Lemonade, they might share the market.
So there you have it. Thanks again for watching. Make sure to subscribe down below. You can find me on Twitter at PaperBagInvest, and you can find Adam on Twitter at InvestInAI. Thank you so much for watching. And remember, it's in the bag.